Good morning, dear students. Sorry, good evening, dear students. It's an afternoon class, not the morning one. Okay, I hope all of you are well today. First of all, if you have any questions or queries from the previous session, anything at all, you may please ask me. If there is no question, please write no questions in the chat section. Okay. Okay. Only one student is left. I think that is new. Anyway, any new students who join, they are recommended first to uh, check the recorded lecture of the previous session so that they have an idea of what we are going to discuss in this one. Okay. So let us continue with our previous discussion. We talked about what is an organization, and we studied broad categories of the types of organization based on what they do, based on what is their ownership, etc. For example, we studied about the businesses, or in other words, organizations that are profit seeking as compared to organizations that are not for profit. Then we studied about organizations that are in the public sector, meaning those that are governed by the government. They are run by the government through its ministries. And then there are private sector organizations which are run by private individuals. Similarly, we talked about NGOs, non-governmental organization that are not in the public sector, rather they are in the private sector, as well as they are not for profit. We also talked a little bit about cooperatives, and in today's session we will be discussing more about these type of organizations. Okay, so let's start with it. In our course in BT and remainder of your ACCA, most of the time you will be discussing with about the for-profit organization, meaning specifically businesses. But as ACCA, you should also have an awareness of how the not-for-profit organizations are run. So this will give you general idea. You see, when we want to judge the performance of a business, an organization which is there to make profit, it is rather simple. You just have to compare the profits that they have been making over the years, and you will know whether their profits are increasing or decreasing, and that you will study in your different subjects such as financial management. You will be calculating different ratios and different variables. You will learn different formulae, and you will learn with the investment how much has been invested into the business, and what are the returns, meaning profits. But for organizations that are not going to earn profit, how do you judge their performance? It is very important to understand their performance as well. An important idea that, first of all, where does the money for not for profit organization come from? So the basic idea about funding is the donations. So you see the donors who are giving the money to a not-for-profit organization, an NGO or a charity, or any type of organization that says that we are working for the well-being of people, whether that be in health sector, education, or whatever. the donors would like to know what happened to that money. But because the organization is not making any profit, it is a not-for-profit organization, so they cannot tell them that, see, you gave us this much money and we made this much profit out of it. So how do we judge the performance of a not-for-profit organization is with these three E's: economy, efficiency, and effectiveness. These are the three areas that are used to judge the performance of a not-for-profit organization. In the next slide, we will discuss about it in detail. Let's get back to the main idea of the not-for-profit organization. What is the objective? It could be any social objective. It could be any health related objective. It could be to promote education in an area, to provide health facilities to people. One example objective is given here: to reduce the number of people living on the streets in its area. So they are focusing on providing house facilities or shelter facilities to people who are homeless in a particular area. This could be an objective. Now, in order to do that, what activities do they need to perform? Operating a homeless shelter, they will have a building in which they will operate it. Raising awareness of plight of the homeless, lobbying for an action on the root causes of homelessness, such as mental illness or poverty. Lobbying is an idea which means that when you as an individual observe something and you want to do something about an issue, as an individual, you may not have that much weightage. Your word may not have that much weightage. In simple words, maybe nobody is going to listen to you, especially if it is the government. You want them to make certain law, but you are alone, so nobody is going to listen to you. Lobbying means that you bring together your like-minded people who also see the same issue as an issue. Then together you go to your local area representative of the government. You talk to him, then he understands it. Now because you have many people with you, so the weightage of your word is more than it would have been when you were alone. Meaning that many people, and especially if they're elderly and very sophisticated or influential people in the area, they talk about something, then other people listen. So if you talk out to a government representative to make certain kind of laws which will be made in the parliament, so that person would be listening, would listen to you at least. This process is called lobbying. And it is a form of a pressure group, that you create a group and you pressurize somebody, not in a wrong way, but in order to achieve some objective. It could be positive, it could be negative. We're not going into those details, but lobbying is what it means. So lobbying for an action to the root cause of the homeless people, so that government may make certain kind of laws for them. How do managers and employee work in that? Trustees hold overall responsibility. Trustee is the people or a group of people which look after all the activities of this not-for-profit organization. This can have full-time employees to manage the operation, assisted by individual volunteers who are willing to contribute time and effort. So people who are employees or are manager, they will be getting full-time salaries, but you can also have volunteers who think the same way, who may not be able to invest any amount or give, excuse me, donation to you, but they would be willing to provide their time free of charge. Those are volunteers. Now, where does the funding come from? From donations. It could be help from the government grants, commission from salaries of formerly homeless individuals. So you see the chain. You took them on board, you provided them shelter, you found them jobs. Now they are at jobs, so they are working fine. So they would, out of their heart or out of the goodness or feeling that this was a good cause, it helped us, so they give some amount of their salary to you as a donation. So it is in turn a donation. Or sale of donated goods. Somebody is donating furniture, somebody is donating books or some things like that. So that can also be there. So this is the background of not-for-profit organization. What are their objectives? How do they work? Now, coming to the three E's: economy, efficiency, and effectiveness. Okay, economy, the financial performance of the not-for-profit organization. You see, if it is a for-profit organization, a business, we will check easily with the help of the profits. But here we don't have profits. So NFP that spend more money than they receive would incur deficits. Deficit means shortage. a lesser amount, meaning you have more expenses, but the donation that you are receiving are less. Repeated deficits will cause NFPs to run out of funds to operate. NFPs that generate more income than expenditure will have surpluses that can be used to expand their operations. Efficiency, the amount of output obtained from the amount of resources input. This is a ratio. The more you, obviously you would want more efficiency to put less in and get more out of it. So it is another criteria to judge how much the money is being spent, meaning that whatever you are in donations you are getting, to what use they are being used. That kitchen A is more efficient. So you see, lesser resources, more output. Also, you need to have an effectiveness. The extent to which an FPO achieves its objective, how much the objectives have been achieved. For example, if a homeless charity's objective is to reduce the number of people living on the street, a measure of effectiveness would be a year-on-year comparison of the number of people living on the streets. So initially you said that in a particular area there were about 500 people living on the street. And the next year you checked again because of your efforts, maybe you find that there are now 450. So you see that the more homeless are coming, but you are managing some and achieving your objective as well. That is called the effectiveness. So these three criteria are used to judge the performance of not-for-profit organizations. Then public organizations versus NGO. Public means public sector organizations. So broadly, these are the differences between these two. In public sector, the owner is the government, and here it varies. It could be individual, it could be trustees, it could be a foundation. Sources of fund for public sector, it is the government. For non-government, I told you that it could be funding from the governments, donations from other individuals, volunteers, etc. What are the objectives? To provide a public service. The organization may be expected to generate surplus, at least not to overspend its budget, meaning the government organization will have to look after these public sector organizations, just like, for example, a government school. So it will, even if they do not generate a surplus, it would be better that they work within the given budget, within the given resources. The not-for-profit organization, in main aim of the organization has a social or a political purpose. It could be any. Political means lobbying, pressure groups, etc. Example could be any state-owned organization, such as a national railway in some countries, schools, hospitals, etc. Or state-owned of business varies between countries. In some countries it is allowed, in some countries it is not allowed. For NGOs, it could include Worldwide Fund for Nature, Red Cross, Amnesty International, etc. Okay. Now, a little bit more detail of not-for-profit organizations. Their comparison between not-for-profit and commercial or business organizations. These are not-for-profit. These are to maximize the owner's wealth and profit. Their organizational structure is they work as a registered society, association, sometimes as a company as well. In this today's session, we'll be discussing more about the company form. It can be a regulatory body if it is a public sector. For example, a regulatory body could be the Central Bank of England, which regulates the monetary supply in the economy. It could be a charity, it could be a public sector entity. A regulatory body is usually related to the making of and implementation of rules. It can be a public sector organization, and where we say this one, it could be a school, it could be any other type of organization, and it could be a cooperative. Remember, in cooperatives, it depends on the owners, what do they want, whether they want to have a profit or they do not want to have a profit. In commercial setup, we have a sole trader, partnership, company, and sometimes cooperatives as well. So you see, it depends on the objectives of the owners. Okay, one student has sent a message that can't hear properly. Please, others, your input. How many of you have a problem hearing this sound? Please write in chat section. Sound is okay or sound is not okay? Okay. Any other have an issue? Okay. All right. Sometimes maybe because of internet, these issues can happen. Okay. If you have missed out on anything, you tell me and I'll repeat it for you. No issue. Okay, good. So for cooperatives, it depends on the mindset of the people who started it. If they want to keep it for not for profit, it will be not for profit. If they want to make it a commercial organization for profit, it will be a profit. No problem at all. And in this chapter, we will be discussing in detail about sole trader, partnership, and company form of businesses. The measure of performance, just like we discussed, could be efficiency, economy, and effectiveness. We know we call it three E's. Whereas for indicator of growth of owner's wealth or profit, it could be profitability, return of or investment, how much you have put in and how much you have taken out as a profit. Share price increase. Again, this we will study when we will be discussing about the company form of business. Activities, these could be varied in may include some commercial activities to fund the operation, but it does not make it a business. Meaning any organization, if it is working for the benefit of the society and during that it performs certain activities because of which it makes some profit, it does not make it a business organization. The main aim is not for profit, so it will remain not for profit, even if it makes some kind of profit. Varied may include non-commercial activities as parts of social responsibility. Okay, let me touch upon these. You see, initially we said that the purpose of a business organization is to make profit, is to maximize owners' wealth. But modern studies say that it is better for organizations to consider the other stakeholders as well, other people as well, other entities which get affected by the business and do something about that as well. For example, if I want to construct a big plaza or a big plant and equip machinery where I will have different machineries, say my production house will be there, production unit will be there, and use some land in which there are a good number of trees. Now I have cut all the trees and they are gone. What is my responsibility in this case in terms of environment? That I replant some in some area so that the trees that have been lost can be regained in one way or the other. Similarly, if I am making goods which are very expensive, am I doing something that is free of cost as well for the well-being of the society? So these activities are non-commercial activities, but they actually may help make a good image of the business in the minds of others. So the main idea is that a not-for-profit organization can have an activity that makes profit. Similarly, a business organization can have an activity which does not make any profit. So it does not make them this or that. If it is primarily with the aim a not-for-profit organization, it will still remain so. If it is a business organization, doing some charitable work will not make it a charity. It will still be a business. Management and employees, the board of trustees holds the responsibility, and usually here we say board of directors or managers. It is run by professional managers responsible to the owners, while will have employees to run the operation, many employees to run the operation, also supported by volunteers. Now, the cooperatives. What is a cooperative? First of all, cooperative is a jointly owned and democratically controlled by its member. Jointly owned means at least two. There will be at least two people. This means at least two will join together, and then democratically controlled. Remember, here democratically controlled means that every person in the cooperative when making a decision will have one vote regardless of the type, regardless of the amount of investment they have brought in. For example, four people get together, they want to make a cooperative. One person has brought in $10,000, one has brought $2,000. One is saying that I do not have any money, but I have expertise in running this kind of operation. I will invest all of my time here. Another person has brought some furniture as an input. Now, when the time of decision making comes, they each will have one vote. The person who brought 10,000 pounds cannot say that I brought most money, so my vote will have more weightage. So, in democratically controlled means that one person, one vote, regardless of the type or regardless of the amount of investment. So, ownership of a cooperative, the individual members of cooperatives are owners. Individuals are invited to join. For example, a farming cooperative, I gave you an example last session, that for example, if in an area there are a certain number of farmers, they individually get seeds, but when they get together, they go to a bigger store or a direct to the factory and they get the seeds in bulk quantities. They will get a benefit, that is the per unit of the seeds, if it is kg or if it is a bag, whatever it is, that price will be reduced, that benefit that they can receive. Aim and objectives aim to meet the needs of its members through cooperation and joint effort. It will earn profit for its member, which is returned to them by a dividend payment. So it means that it depends on the need of the members. They want to make profit, they will make profit. If they do not want to make profit, they will just reinvest all the amount back into the business. For example, if the farming cooperative makes a commercial profit, this may be paid back to the farmer as dividends, or they can store that money, keep it safe with them, and use in the future. Activities and management. A small cooperative organization is likely to be managed democratically with significant decision taken by all members together. In a small cooperative, the members are likely to be involved in day-to-day activities. For example, the farmers may be involved in the management and activities of the farming cooperative. Advantages: forming cooperative allows individual to, excuse me, share their resources and skills. That is the basic idea that we discussed while making an organization. This is the basic idea for the organization and applies to cooperatives as well. Okay. Now, when we talk about commercial organization, those organizations which are aimed to have profit. Here, uh, the word market, I would like to explain it in simple words. Usually when we say the word market, a physical location comes to our mind where there will be many different shops and people go there and make purchases. In business, the definition is slightly changed. Market is a situation, not necessarily a place, where there are four elements. Number one, a buyer. Number two, a seller. Number three, a product, which can be a good or a service. And number four, its price. Whenever these four elements combine, whether there be in a physical place or on the internet, if these four things combine, that will be known as a market. So remember that market is also a market which physically comes to your mind, that a place where there are different shops, but that is in plain English. In business or economics, we say it is a situation where there are four categories, four elements combined together: a buyer, seller, product, and its price. Now, would you please answer a question whether this class that is being conducted at the moment, according to this definition, if it is a market or not? If yes, then who are these elements? Who's the buyer? Who's the seller? What is the product? What is the price? I repeat the question. Based on this categorization, is this class a market? If it is a market, then who are the buyer, seller, product, and price? Just take a moment, think about it, and write your answer in the chat section. Anyone? Expecting an answer from you guys. Excellent, Husna. Yes, students are the buyers. Academy is the seller, and I am representing the academy, so I am the seller at the moment. The service is the tutoring services, the syllabus that is being taught to you, or the knowledge that is being provided to you, or the practice that will be given to you. And price is the fee that you have paid to the organization. So even though we are not in the same physical place, this is still a market. The setting in this situation is still a market. So remember, later on, we will be time to time referring to the word market, and it would mean either a buyer or a seller or a product or a price. So for example, if I say the market for oranges, this means that who are the buyers of the oranges, who are the seller of the oranges, where is what is the price of the oranges, things like that. Okay, so a common market or output defines each sector, and organization with these sector will have similar characteristics. Sectors. Now remember, we are talking about business sector now. Helps investor compare organization. Now there are some broad categories given here, and let's give it a view, and then I'll show you a list, and you will randomly have to see which one falls in which categories. For example, manufacturing and construction. In manufacturing, we take raw materials, process them in a factory, and convert it into finished goods. In construction, it is normally building some houses, roads, dams, bridges, etc. Financial services, for example, auditing services, banks, mining and extraction that are used in to extract the natural minerals and elements from their ores, agriculture and commodities, farming, etc. Now, here is a list. You do not need to perform all of these, but take each student should take two or three randomly and tell me whether which one falls into which category. Take about 2 to 3 minutes. Pick up randomly and tell me that these, so these should, if you select this one, first one, go to this one, and then this one, things like that. Each student should have two or three, right? For example, if you say insurance company, write insurance company in the chat section, and then which sector do you think it falls into out of these given ones? Yes, please. Take 2 or 3 minutes and write in the chat section. I would appreciate that if every student contributes, it is very beneficial for your learning as well. Okay, I'm expecting responses now. Okay, good. Uh, Bank and cement supplier, you have to write bank will be in which of these sectors, cement supplier will be in which of these sectors. Okay, all right. Let me show the answers to you and then you can compare for yourself. Take a look. Okay. We'll take a 5 minutes break now and freshen up. And after that, we will be discussing the different types of commercial organizations in detail. 5 minutes break. Okay. All right. So now let's get on to some more details of the types of commercial organization based on the type of ownership. This previous exercise that we did just right now, this was the type of organization based on the commercial sectors that they are operating in. So that was, or in other words, the nature of the business that they are performing. Now in this class, in this session, we will be discussing about the commercial organization based on the ownership. So primarily we categorize these into three forms according to the registration or according to how they are identified in the UK. One is the sole trader, then is the partnership, and third form is the company or incorporated entities. The basic idea for the sole trader is the owner is a single individual, a single individual. Remember that this individual can run a business. He may have many employees, does not matter. He will be a sole trader if he's the single owner. If there is no joint owner, if there is no other owner, it will be a sole tradership or sole proprietorship. He can have many, many employees, it does not matter, but those employees are not part of his ownership. So that is a sole trader. For partnership, you need to have two or more than two individuals. This type is known as a business in which there are at least two owners, and mostly majority it is up to 20 owners. That will be a partnership. Company is a separate uh, scenario. You see, in the UK, when you have to run a sole tradership, you do not necessarily need to register it with anyone. You just do some for normal formalities for that particular area. And for example, if you are renting a shop, you will have to have a lease agreement, rental agreement, and from the local municipal, you will have to have a clearance that you want to do certain kind of business. Per se, you do not have to register as such. The basic reason is that in sole tradership, the legal status, the owners and the business are same legal entity. What does it mean, same legal entity? Let me take you one step back. And this is for those who have not started financial accounting. We have two broad categories in the accounting: assets and liabilities. Assets are those things that a business owns, and liabilities are the things that the business owes. For example, I start a business, I buy a table for my office. That is my asset. And I have purchased some raw material for which I still have to pay money. So that will be my payable, and that is my debt, also known as my liability. So something that the business owns is the asset, something that the business owes to somebody is the liability. Now, same legal entity means that, for example, this is Mr. A and this is Mr. A's business. In the eyes of law, these are one and the same thing. So if Mr. A buys a table for his business, it is as if it is the business's table, and same it is the Mr. A's table. Its legal status is as if it was it in Mr. A's home. If he buys a car which is used specifically for the business, but it will be considered his own personal car, there's no difference. And that makes a huge difference when we come later on to the other parts of this discussion. Now, for partnership, uh, mostly a general partnership, a normal routine partnership, does not need to be specifically registered with the government. But there is a law under which it operates. It is called the Partnership Act. All the disputes are resolved between partners under that one. When you reach, hopefully, next session in the after completing your AFD, you will reach law, ACCA F4, LW, the business and corporate law. We will have a complete section of partnerships that details over there. But here you need to have a basic understanding. So a partnership is a business in which at least two people are there as joint owners, or maximum up to 20. Companies, I'm leaving for a while. First, I will give you a distinction of sole trader and partnership, then I'll come to the company. Okay. Now, I'm not going one by one. I'm going by my own logical sequence so that it helps you. By the end, we will have covered the whole topic. Who manages it? Usually the owner himself manages the business. In partnership managed by one or more partners, it depends on what they have agreed. Suppose there are 10 partners, 9 have agreed that we will only invest money and we will not engage in the activities, and one partner says, I will be the person handling it. It's totally up to them. Okay. Employees. Employees may be recruited for the business operations, may be recruited for the business operations. So same thing, nothing different here as well. Claim on profits. Here, the owner is claimed to all the profits. This is a benefit of sole tradership, that he does not have to share the profits with anyone. But at the same time, there is a problem that if he incurs loss, there is nobody to share the loss as well. He will have to bear all the losses by himself. Well, in partnership, they are entitled to the partnership profits per partnership agreement, whatever they decide. Suppose Mr. A, B, and C, they made a partnership. Mr. A brought, suppose, 10,000 pounds. Mr. B brought 5,000 pounds. Mr. C brought 2,000 pounds as an investment. They started the business, the partnership with this 17,000 pounds. But they decided that we will divide the profits equally. So that is 33, 33, and 33%, roughly. There is no legal restriction on that. Why would they do that? It's up to them. Whether they want Mr. A will get 90% and rest of the two will get 5%, totally up to them. So the profit sharing ratio is totally up to the partners, whatever they decide. So it is very open. So, but the problem is that you will have now, if you get a partner, now you have to share the profits. But on the other hand, the benefit is that now you have somebody to share the losses with as well. Another thing, when you have a sole tradership, there is only one single mind that is making the decision. Nobody to criticize him, nobody to make the decisions better for him. So that is a lack there, that you do not have anyone to share your decisions with. That is in one way good thing, but in general, in order to have good decisions, we need to have somebody with whom we can discuss the decisions and come up to a better decision because of their critical analysis, because of their objections. So we will be thinking about a better decision. Now, one can argue that a person can discuss with his spouse or with a friend, or yes, but you see, that person is not the partner in the business. They may give you a general idea. For example, if you are running a business, you come and ask me, sir, you teach business and give me an idea. I may be giving you an idea from the core of my heart, but my profit motive is not there. So the level of attachment is not there had my investment been there in that as well. So a partner in this way, a good thing. Okay. Now, a very important area that I left here, this liability for the business debt. Here you see the word unlimited. Now, let me explain what it is. Right now, I explained to you that in sole trader, there is no separate legal entity, meaning the property of the business is the property of the owner, and the property of the owner is the property of the business. Now, suppose Mr. A has a sole tradership. After running for a while, 1 or 2 years, he has incurred so much losses that he wants to close down the business. Now, this is one of the most important concepts in business. He wants to close down his business. What he can do, what he will do, what he's legally required to do, is he has to check all of his assets, convert them into cash. How? Auction them, sell them out, convert all the assets into cash. He gets some amount. After that, he has to check how many liabilities does he have. Usually in these cases, business has more liabilities than assets. So for example, when he sold all the assets, he got, suppose, $500. But the liabilities that he had to pay of the business were $600. What is the deficit? 100 is less. Where will that come from? Because he is a sole trader. This means that his assets are the business assets, the business liabilities are his personal liabilities. Now, the deficit amount, he will have to sell even those assets, which are called personal assets, he has never used in the business. But the law doesn't care for that. Law says that you have to give all the money to the people who you owe money, whether you have to sell your personal assets or not. And this is known as the concept of unlimited liability. The liability of the owner is not limited to the amount invested into the business. I repeat, unlimited liability means the liability of the person in case when the company when the business is winding up, when the business is closing down, his liability is not limited to the amount invested into the business. In case there is a shortage, there is a deficit, he will have to sell his personal assets and pay to the creditors, pay to the people who he owes some liabilities. This is the basic idea that you need to understand. So for sole tradership and general partnership, the liability is always unlimited. But there are two other forms of partnership as well. I'll simply touch upon that because the details are not here. Those are in F4, but you need to understand that there are two other types of partnership in the UK. Number one is limited liability partnership. Let me explain these to you. In partnerships, we have general partnership in which liability of all partners is unlimited. Meaning, if the partnership dissolves, if there is any deficits, partners will have to even sell their own personal assets, bring the money to the creditors. Second is the limited liability partnership, also known as LLP. This is a special type of partnership in which the liability of all partners is limited. Limited to what? Limited to the amount that they invested. For example, Mr. A, B, and C, they started a business with £10,000 each. Okay. Now they registered as LLP. Here, remember, for a general partnership, registration is not important, but for a limited liability, they will have to register with the government, with a special department. I'll talk about it later. Now it is running as an LLP. LLP is a separate legal entity. Remember, for sole tradership and general partnership, we said that it is not a separate legal entity. It is the same as the owner. But LLP is different from, it is considered to be an artificial person, a person separate from the owners, meaning whatever the LLP has, it's not the partners, it's not the ownership of the partner, it is the ownership of the company. Now, this may sound a little bit confusing for students in the beginning, but try to just go with the flow and you will understand it clearly. According to law, law is seeing LLP as a separate person and partners as separate people. So whatever the ownership of the LLP is, that is not the ownership of the ABC, of these partners. Now, suppose this also goes into losses, a lot of losses, and it also needs to close down. We see that again when we sell all the assets of the LLP, meaning limited liability partnership. Now, these are the limited liability partnerships asset. We sell them all and we get £500, suppose. And the liabilities are again £600. But in this case, now because it is an LLP, this deficit amount cannot be repaid to the creditors. What will they do? That's a separate story. But A, B, and C, they're not required to bring any more money. They are liable for what? To the amount that they already invested. Only this will be lost. They will not have to pay any single penny again. Now, come back to this. General partnership, the liability is unlimited. The partners are personally liable. All the partners are personally liable. In limited liability partnership, the partnership liability is limited to their investment. All the partners, their liability is limited. Now, there are two categories. One is a general partnership. Liability of all partners is unlimited. Limited liability partnership. Liability of all the partners is limited. There is a third category. Try to focus. The name is a little bit similar. Number 3. limited partnership. LP. This is a special type. You see, the difference is limited liability partnership. Here is only limited partnership. In this case, at least one partner, one partner will have unlimited liability. Remaining partners can have limited liability. Now, what does this mean? Suppose there are three partners, A, B, and C. They registered with the government as limited partnership. They said that A will have unlimited liability and B and C will have limited liability. Now, in this case, again, we run the same scenario. Business is closing. We have assets we sold and we got 500. We have liabilities which are of 600. The deficit is 100. Who will pay these? A will have to pay these because A's liability is unlimited. His liability is not limited to the amount that he has invested into the business. So B and C will be safe in this case, and A will have to bring in all the remaining amount. Now, why would this happen? Isn't it injustice to A and benefit to B and C? They were making the partnership in the beginning with this form. A knew that this is a possibility, this is a risk. Now, let me repeat this whole scenario for you. What is the concept of limited liability? First of all, it is in the background, we have to check the legal status of the business. If it is a sole trader or if it is a general partnership, in the eyes of law, these are the same as their owners, meaning the assets of the business are the assets of the owner. Because of this, they will have unlimited liability, meaning if the company, if the business liquidates, if the business ends, all the assets will be converted into cash by selling them, auctioning them, and the amount will have to be paid to the creditors, meaning the liabilities will have to be fulfilled. If there is a deficit amount, the owners will have to bring from their own pocket, from their own personal assets, and complete the life. That is the unlimited liability. For limited liability, the liability is limited to the amount invested. So remember, we do not have a sole trader who has limited liability. That will always be a unlimited liability. For partnership, we have three categories. Number one, general partnership in which liability of all the partners will be unlimited. Limited liability partnership, completely reverse of that, in which the liability of all the partners will be limited, meaning only the amount that they have invested, they are liable for that. They do not have to bring any more cash or sell their personal assets if the business goes down and there are more liabilities than the assets. They will not have to pay. Third special type or a hybrid type is the limited partnership, in which at least one partner will have unlimited liability. You can say that that is a scapegoat. At the end, all the burden will be on his shoulder. Remember, I said at least. There could be two, there could be three, there could be five. Suppose there are 20 partners, 10 of them have unlimited liability or 10 of them have limited liability. That is still a limited partnership. I hope the scenario is clear up till now. If you have any questions up till now, please ask in the chat section. I'll give you 1 or 2 minutes. Wrap your mind around these. After that, I will go to the company form of business for you. If there are no questions, please write in the chat section. No questions, then I'll move forward. Others, please, if you have any questions, please write the question. If not, then say no question so that I move forward. Okay, thank you. Now, company form of a business. Just like we said that LLP and LP have to be registered with the government as whatever they want to make. Company is also a form of a business which you have to register with the government. Remember, in UK, companies are formed under Companies Act 2006. Just need to remember it once. Usually it is not asked in the paper, but you have to have an idea. Companies Act 2006. It tells you how the company will be formed, how the company will be run, and if need be, how the company will be dissolved. Again, in F4, there will be a full section of company law that we will study. But here, because the basics need to be known, is number one, if you want to register a business, it's totally up to you. There are advantages and disadvantages of sole tradership, advantages, disadvantages of partnership, advantages and disadvantages of companies. It is up to the people who want to start a business. Will they choose whether they want to go for sole tradership, whether they want to register for any type of the partnership, whether they want to register as a company. Okay. If you want to register as a company, you will go under Companies Act 2006 to Companies House. Companies House, or specifically the registrar at the Companies House, is the official entity of the government with whom you will get registered. For example, you see, you are attempting ACCA, so you have to register with ACCA. Similarly, for every particular task, there is a specific body with whom you have to get registered. So, for to become a company, you have to go to Companies House. There is a complete procedure which we'll study in law, and you get registered as a company. Now, number one thing, company has also a separate legal entity. Number one, every company will have a separate legal entity. Number two, the owners of company are now broadly known as members or shareholders. In sole tradership, we say who's the owner? Sole trader. In partnership, who's the owner? Partners. In company, who's the owner? Shareholders or members. All right. Now what happens? You see, when you start a sole tradership, you bring in some money and you start business. But because that is not a separate legal entity, your money or your business's money is the same. But in company, because it is a separate legal entity, people who start a business, start a company, they invest, and in return, company gives them shares. Now, from the legal standpoint, you see Mr. A, B, C, D, E, F, G, H. These are the people who wanted to start a company. They started a company XYZ. I'm not writing the full name for purpose here. They started a company. Now, from the legal standpoint, this company is a separate person, also known as an artificial person. That's a separate legal entity, meaning that A, B, C, D, E, F, G, H, they have invested and in return, they get shares of the company. Share means a share, a part of the ownership. Simple. Now, they are the shareholders. It is up to them whether they want to run the company themselves or they want to hire some professional managers to run the company. Those who run the company are known as directors. These specialist managers are known as directors, hence the board of directors. So the board actually runs the company. Again, it depends that these shareholders want to become the directors, and usually in the early stages of the company, some of the shareholders become the directors themselves. No problem. But later on, you can hire specialists. So it is not necessary that a director be a member or a shareholder. He can be a shareholder, he cannot be a shareholder. So the basic idea is that who runs the company? Directors through the voting of the shareholders. Okay. Now, We have cleared this. Shareholders, these may be individuals or other entities. One company can hold share of another company. Government can hold shares of another company. So it is not necessary that the shareholder must be an individual, a human being. It can be another entity. The liability is always limited. In most cases, it is limited. The shareholder's liability is limited to the investment. Remember, in partnership, we said that the liability of the partners is limited. Here, suppose each of every one of them has paid £1,000, invested £1,000. Again, if the same thing happens, the company goes into liquidation, it dissolves, it ends, and liabilities are less than the assets. Who will pay? Nobody. The liability of the original member of the members or the shareholders is limited to the amount that they have invested, not more. So, for management, professional managers may operate the company. These will be known as directors. May also decide to manage the company directly by themselves. Here, employees are recruited. Okay. Now, the owners do not have a direct claim on the profit. This is a very strange situation. According to law, number one, if the company has not made a profit, obviously it cannot pay the profits. But if it has made a profit, it is up to the directors to decide whether we need to give the profits to the shareholders or whether we want to reinvest it into business. Now, it may seem a little strange in the beginning that you see there is the shareholders' money. Why are they not getting the profit? The reason is that they have appointed directors to run the company properly. Now it is up to the director. Legally, directors are given the right to decide whether to share the profits with the shareholders or not. Maybe they feel it better that this year it is good that we reinvest the amount back into the business. So the business will grow and eventually shareholders will have the benefit of it. The part of the profit that the directors decide to pay to the shareholders is called the dividend. It is that part which is paid to the shareholders. The remaining part, which is reinvested into the company, can be called as a retained earnings or retained profits. Those are retained into the business. Okay. Now, let me summarize the whole scenario for you. Starting with the ownership. The sole trader, single owner with unlimited liability. If the business goes down, he will have to pay the liabilities from his personal assets even. Partnership. We have general partnership in which there is unlimited liability. We have limited liability partnership. In the partnership of and the liability of all the partners is limited. Then we have limited partnership, a hybrid, in which at least one partner will have unlimited liability, the remaining will have limited liability. Then we have company in which we have separate legal entity. The shareholders are not required to pay any amount other than what they have already invested into the company. In sole tradership, the profit is wholly solely for the sole trader. In partnership, it is divided according to the agreement between the partners. In company, it is divided by according to the directors' decisions. If they want to pay, that will be called dividend. If they want to retain into the business, that will be called as retained earnings or retained profits. Let me summarize it further for you, because company form of the business is the one which you will be taking in detail in your ACCA. You see, it is the higher form. So if you understand the companies and its operation, you will understand partnerships and you will understand the sole trader as well. So limited companies, the critical feature of a company is a limited liability of the owners. The owners of a liability for a company's debts is limited to their investment in the company. Companies can also have a separate legal entity from their owner. This means the company may enter into contracts on its own. Its assets are its own, its liabilities are its own. Most jurisdictions require companies to file documents and financial results to the regulator annually. This regulator is the company's house. Okay, annual return. These are different financial documents that are required to be annually submitted as a record to the company's house. Owners do not have a direct claim on the company's profits. Profit may be disbursed to the owners through dividend as per director's requirement, director's decision. It is not necessary for owners to participate in the management of the business. Owners often recruit professional managers as employees to manage the company. Those are known as directors. Companies that meet specific requirement may go public. Okay. Meaning, okay, now broadly speaking, company has two types. Companies has two types: private and public. Here I'm going to add the word limited now. Remember, earlier in the previous session and in today's session as well, we talked about public sector organization. When we use the word sector, it means that who's the owner? Public sector means government is the owner. Here we are using the word limited, not sector. Public limited. This has total different meaning. It is a type of a company. Now, the private limited company is that one in which shares are not sold to general public. The shares of a private limited company are not available to general public. Who can buy? People write directly to the directors. That could be family members, that could be friends of the original owners, or somebody that they know, and they write application directly to the directors, and then they can get share if the directors allow. Public limited companies are those that can sell shares to general public. And then their shares are usually dealt in stock exchanges. Stock exchange is a special type of market where shares and other securities are bought and sold. Now, the word that is used here is go public. Go public means that a private company, initially it was formed as a private company. After meeting certain legal requirements, it goes public. Now it can sell shares to the general public as well. So, companies that meet specific requirement may go to there. Those specific requirement again are not in BT course. You will study it in law, meaning that their shares are now listed on the stock exchange and publicly traded. Public listed companies must maintain compliance with strict listing requirements and government rules. Obviously, so this was the whole idea behind the uh, company form of business and generally sole trader partnership and company form of a business. Just to give you an idea about the limited and unlimited liability once again. Suppose A's business is a sole trader business. They got a loan from the bank. This is a liability, £100. Credit purchase is another liability, £25 dollars. Loan from funds provider or a bank, £75. So when they are closing their business, this is their total liability. And total assets after liquidation, meaning after sale of all the assets, they get only 150. Now they have a difference or deficit of 50. 50 is less. This will be taken from selling the personal assets of A, because A and the business are same. But if you go to the company form of business, Mr. A invested into a listed company or a limited company, sorry, not listed, limited company. Again, in order for comparison, I've given the same data. Loan from the bank to buy a car is $100, credit purchase is 25, loan is 75. After selling the assets, we get 150. So the deficit of 50, who will pay? Nobody. Cannot be taken from selling the personal assets of A. That is the beauty of the limited company, and this is one of the most important advantages for which people make limited liability company. And I explained to you there are two types. Private limited companies are those which cannot sell shares to the general public, whereas public limited company can sell shares to the general public. Okay. Now let's take a 5 minutes break, and then after that we will have a brief activity and we will continue with our discussion. Okay. To bring our discussion to a summary, here's a brief activity that you need to perform. One, two, three, four, and five types of organizations are there. Read them and write your answers accordingly, whether that is a company, whether that is a charity, whether that is a cooperative, whether that is a government owned organization, whether that is a partnership, or is a sole tradership, anything that you understand from these sentences. So you do not need to write the complete sentence in your answer. Just write one and then organization type, two and then organization type. You have about 5 to 6 minutes to attempt these. Please start. Okay, I have received answer from 3 students now. Others, okay, 4 students now. Very good. I'll show you the answers, but I need your, excuse me, your input as well. Okay, good. Now let me reveal the answers to you. Now, you see a profit-making organization that is owned by members but often managed by professional managers. This gives you a hint towards a company. Secondly, a profit-making organization, meaning it will always be profit-making. Uh, okay. A children's welfare organization that is supported by voluntary donation. So it goes to charity. You can also say that this is an NGO, fine, or not-for-profit organization, that is also fine. A group of independent shopkeepers who combine to buy goods to form suppliers at low prices than they would otherwise obtain independently. So no specific mention of profits is there, but a cooperation. So cooperatives is fine. A local government organization that aims to provide local government organization. So it is a public sector organization. 6 individuals are set up in a business and a taxi service. They operate the business themselves, but they have not created a company. So you see, if it goes up to like this, it could be a partnership. Sorry, it could be a company. So it has clarified that this is not a company. And then you can say that it is for a business which is for profit only. So it cannot be cooperatives. So it must be a partnership. Okay. So now we summarize the whole chapter, and after that we will have the MCQs practice, which is very, very important from your exam point of view. So we studied about the overall situation. We said that the components are social arrangement, collective goals, control activities, and the boundary. What is a social arrangement? A group of more than one person is a organization. Formal and informal relationship within the group can exist. Formal means which follow certain rules. Informal means they do not follow any rules. A common objective that the organization wants to achieve, meaning the collective goals are higher, individual goals are lower. It is the basic purpose of the organization. Controlled activities mean structured operations or how the organization achieves its objective. The check and balance, if you remember, we discussed that. Check and balance. Not-for-profit organization would be charities, government, cooperatives, political parties, associations, professional bodies. Business organization would be companies, partnership, and we did not touch this one, joint ventures. This area will be discussed in chapter 2 when we will discuss the SBUs, strategic business units. Then almost any objective can be here as long as it is up to for the benefit of the society or human beings, healthcare, education, entertainment, public sector. Here for business, it is the maximization of owner's wealth, or you can also say profit. This is the primary objective of a business organization. Uh, Here it will be service operation, fundraising, profit generating activities could be there, and not for profit may have commercial activities, but it does not make it a business. Similarly, a business operation could be service operations, manufacturing, distribution, marketing, and sales. Other commercial. We will throughout our course we will be discussing these from time to time. Okay, now with this we need to work on our. Now we will start with our MCQs. I will show you some MCQs and I'll number them. You will have to read them and answer A, B, C, or D, or whatever the appropriate answer is. And after that, I will give you the answer. Now, I want every single person, every single one of you to participate in it. The reason is that with your answers, I not only gauge your performance, but my performance as well. I understand what topic you have clearly understood, which topic has issues. Meaning, if one MCQs, most of the students do it incorrectly, I will know that that point is not clear. I will have to repeat it and I have to re-explain it to you. But if you do not answer, I would never know. So, and with that, my responsibility will end. So if you attempt the question, it is very important that you attempt it so that you yourself know how much do you understand out of the given syllabus. So let's start with the number one and two. You have to read all. Okay, let me explain the first one. Daniel is Daniel is organizing a social event. Which of the following would be benefits for him for forming a committee to manage and planning process and the event itself? Meaning, rather than doing the activity alone, if he forms an organization, means combines different people, what will be the benefit? Number one, it will help to overcome his limitations. Yes, by bringing on board other people with different skills to him. Yes, that we studied earlier. That is the basic reason of making an organization a benefit. It would save time through joint efforts. Yes, it would help satisfy Daniel's social needs. Social needs for humans is to stay in a group, to be in a group. This is one of the social needs because of which we form organization, because of which we form friendship groups. In chapter of culture, fourth chapter, we will study about this in detail. Now, this is not the answer. Why? All members of the committee would have to be skilled in all the aspects of the managing the event. If everyone has all the skills, why are they making the group? We said that we want to make a group because people have limitations. One person who lacks some skills, the other person has those skills, so they complement each other. That is the reason we make the organization. If every member has all the skills, why do we need an organization? No need. So that's why 1, 2, and 3 are correct. Here, number two, many schools run fundraising events such as feats, where intention is to make profit. I told you in the first session, that whenever the word schools, hospitals, colleges, just like that is given, in UK, it is considered to be a public sector. Now it says that if it is a public sector, we know it is not for profit. If it goes for an activity which makes them profit, does it make a business? No, that does not make it a business. It does not make it a profit-seeking entity. So it is a false statement. Okay. Please attempt these. They're rather simple. Okay, most of you are correct. You see, which of the following are usually seen as the primary objectives, main objectives? That would be maximization of shareholder wealth and make a profit. So D is correct. Now protect the environment. It could be a secondary nature, but later on we will study that this is also very important, because if you are taking steps which are harming the environment, that will create a bad image in the society of your business, and that will affect your profits as well. But for now, okay. Which of the following is not a benefit that the organizations have or individual? Meaning, out of these four are the advantages. One is not an advantages. You have to tell that when making an organization. So speed up time taken to make decision. I'll have to explain it a little bit because this idea will help us later on in future discussions. You see, there are two dimensions of decisions. One is speed, other is the quality or efficiency or goodness of a decision. For a single person, speed is more, but quality is low, because he does not have to discuss with anyone, so he can make the decision quickly. But at the same time, because he is not discussing with anyone, there is nobody to critically analyze his ideas, so the quality will be low. There could have been better decisions, but because he does not discuss with anyone, he compromised on a lesser decision. But more people, when there are more people, the speed will be low, but the quality will be high. Because speed will be low because they have to discuss now, it will take more time. But because of that decision, the decision will be of good quality, of a better quality than with a single person, because they will give ideas based on their own experiences, their own skills, and their own qualification, etc. So you need to remember this point. Second is, okay, this is C. Okay, let me explain. Greenwatch is an independent environmental charity. Number one, when it says charity, it cannot be a cooperative. To lobby the government for improved environmental regulation, it is not asking the government to do it, it is lobbying to do it. What type of organization it is? So it cannot be a public sector organization because it has to be run by a government. It cannot be a commercial organization because commercial organization must have a profit. So it does not say any profit. It cannot be cooperative because for cooperative, we need to know that there are people who are working for either their own benefit in one way or the other. And another distinguishing point is it will be mentioned that it is democratically controlled by the members. So no such thing. So you have non-governmental organization here. One important tip of attempting MCQs. Sometimes when you do not get the answers directly, you use the elimination method, just like I did. For example, you studied the whole scenario. You say that, okay, fine. Can this be a public sector organization? No. Why? Because in order to have public sector organization, we need to see that it is run by the government, which it does not. So it cannot be the answer. For cooperative, just like I said, either it has to tell that there are many people involved, they are cooperating, or they're excuse me, they are democratically controlled. It is no such thing, so it cannot be that. Non-governmental organization may be commercial. It is not a profit or profit-seeking organization. So that's why we have eliminated all three. So the remaining four, how improbable, or if even we don't know, it still will be the answer. That is tip number one. Tip number two, there is no negative marking. If you write the incorrect answer, it will not deduct any mark. But if you do the write the maybe by fluke, you write the correct answer, you will get a mark. Now remember, when in the paper, there may be a situation in front of you where you are not sure what the answer could be. But And this goes when you have studied all the text, you have attempted all the tests, you have practiced the MCQs. This tip will help you a lot there. Suppose you read the question, you don't understand well, you are not understanding the options as well. What you do is read the whole question, read the complete options, then flag the question and move on. Flagging means in the software ACCA, they have an option. You click on it on a question which you do not understand properly at the moment, and you would want to come back to it later on at the end of the your paper after doing all the other questions. So that is called flagging. One sub tip in flagging is that you should have a piece of paper with you and a pen with you. Whenever you flag a question in there, write its number on the piece of paper in front of you as well. What sometimes happens is that students are in a rush, in a hurry, and they do not see that one of the flagged question was already left flagged there. They did not attempt it and they submit the paper. Now, if you have written on your, it is shown on the screen as well. But if you have written on the piece of paper and then when you re-attempt that question, cross it out. At the end, you will have something to tally with. Maybe you do not focus more on the screen, but you will have it in writing with you that question number, suppose 5, I have not attempted it. So this is another tip. I'll keep on repeating such tips during my lectures as well. So elimination. So, okay. Now, when you have flagged a question, you moved on. But remember, what did you do? You read the question completely and you read the options completely. Now you don't understand that. Don't make up a mind. Make up your mind. Go forward. Do the next question, next question, next question. At the end, come back to this question. You will see that if you have attended regular classes, if you have practiced a lot, you will this time find it easier to find the answer. In most of the cases, students get the answer. Why? Because at the back of your mind is still working curiously. What could be the answer of that? You're not thinking about it, but your back of unconscious mind is thinking about it. And because you have taken all the classes, you have practiced a lot, so mind will formulate an answer. And when you come back to it, sometimes you would say, oh, this is an easy answer. Why did I flag it? Because your mind was back of the background, it was still working on it. So this is another tip. Do not waste your time in keeping on thinking and what is this question saying, I don't understand. Just read it, read the answers, flag it, write it in your on your piece of paper and move on. Later on, come back to it and attempt it, but never leave any question unattempted. Attempt all the questions. Even at the end you do not know the answer, just click on A, B, C or D, whatever. Do not leave it unattended. This 1 or 2 marks can save your paper in this case. All right. So which of the following statement is correct? Let's analyze. Partnerships are owned and run by one or more people? No, two or more people. Private company, limited companies can sell shares to public? No, they cannot. Shareholders in the companies typically have limited liability? Yes. The owners of sole trader typically are no, they do not. They have unlimited liability. So C is correct. Here, companies tend to raise money from central government. No, it is for the public sector organizations. Most sole traders in partnership have the aim of maxi, yes, and in company as well. Public sector organization controlled by central government, yes. Charities form part of the public sector, no. Charities are in the private sector. So we have 2 and 3 correct, which is option C. Okay. These are sort of a lengthier form of questions. One same question, part A and part B. So you can write answer with A and B. Here you will have to write one. Suppose which one is or suppose A, you write the answer one of these. B, write answer one of these. Suppose if A is the private limited company, you say A, private limited company. Okay. Now, first one, this type of organization can sell its shares to the public. So number one, it has shares. and it can sell to the public. So that will be public sector organization. This type of organization is owned and run by two or more people who are legally indistinguishable from the meaning separate legal entity. This goes for the partnership. This type of organization is controlled by the government, public sector organization. This type of organization is owned and democratically controlled by its members, that is cooperatives. Then below are four types. It is asking for most likely to be classified as part of private sector. So that will be charities and limited companies. Schools and police force will be in public sector. Okay. Please attempt these four. Okay. Number one, which of the following is not a key feature of the organization? We know that collective performance, controlled performance, collective goals, and social arrangements are. So, creation of product or service is not necessarily a feature of the organization as we studied in the definition. Which of the following is normally found in the public sector? Schools would be the answer. The public sector is normally concerned with provision of basic government services. So public sector, the organization that provide the uh, public service. Okay. A Co is a company which specializes in forestry. It has recently purchased B Co, which runs a chain of recreational resorts. A has allowed B to build several new resorts on the land which is owned by A, but which it is no longer able to use. The resorts have proven highly profitable and popular. So you see two organizations, they are coming together and getting more benefit from an area where they could not get any benefit. That is the concept of synergy. Okay. Please attempt these. Good job, people. Okay, which of the following statements regarding limited companies is correct? Okay, public limited companies have access to wider pool of finance than partnership or sole traders. That is true because they can, now you know that they can sell shares to the general public. But later in your course, you will study that they also have other funds. They can get loans from the general public as well as banks. So they have wider pool of finance available. What's wrong with the other statements? We should also look into that. Both public and private limited companies are allowed to sell shares to public. No, only public limited can, private limited cannot. Companies are always owned by many different investors. Now, this is not necessary. One person can also may own a company. Remember that. That is called a single member company. Single person can have a sole tradership, but he wants to form a company. He can form a company with one owner. That remember that. Shareholders are reliable for any debts the company may occur. No, they are not. They are only liable for the amount that they have invested. Okay. Consider the following list of organization. It says which of these organizations would normally be classified both as a not-for-profit and in a private sector. Okay. Government departments. These are not for profit, but not in private sector. These are in public sector. Partnership. These are for profit. Charities are not for profit and in private sector. Companies are always for profit. So only three is our correct answer, which is option B. Third, an organization that is owned and democratically controlled, I guess by now you have clearly understood it. It is cooperatives. Okay, one and okay. Mestros is an organization which imports computers into country A and sells them in public in order to the public in order to make a profit. It is owned by, so make a profit makes it a business. It is owned by 15 individuals, means it cannot be a sole tradership, each of whom own an equal number of shares in Westeros. Westeros is not a public limited company. So there are shares, but it is not a public limited company. Which of the following is likely to be the most appropriate source of finance? So it is not directly asking you which type of of a business it is. It is asking you the source of finance. Now, why is this? If it was a government organization, we could go with this. Issue of shares to public. Because it is not a public limited company, we cannot say that this can be a possible source. Donation from the public. It is for charities only, which it is not. So we are left with existing owners of the Westeros, whether it is the members, shareholders, or it could be people, partners. You see, it is owned by 15 individual investors, which own equal number of shares in Westeros. So maybe share means the part. So it could be a partnership, or it means shares in actual shares. It is a company, but it is not a public company. It is a private company. So the existing owners or existing shareholders can put in more money, get more shares, and the Westeros will get the funding. Not-for-profit organizations have varied objective, means different objectives, which depend on the needs of their members of the society. Yes, that is true. Then the primary objective of a government-funded organization is to reduce cost. No, it is not. You see, government works in a way that where it needs more money, it can apply more taxes and get money from people and then invest and then use it for the betterment of the people. So reducing of cost is not an objective for a government. It could be an objective for the business organization in order to improve the profits. Okay. Finally, charities would be classified as a type of non-governmental organization. Yes, that is true. Okay, with this, we have come to an end of our chapter. Now, I have uploaded these lecture slides onto the portal. Also, I have uploaded a set of 10 questions, MCQs for your home practice. I will share that document with you here as well so that you can download it and use it as you please. Just give me a minute. I'll try to share it here with you. Okay. Mm, okay. Okay, it is not permitting me to add it here, but you can find the document. It's a zip file with practice question title. It is there on your on the portal, and along with it, when you download it, there will be two documents. One will be the question, the other will be the key. First, you attempt the question, and then you compare with the key later on for your good practice. So I hope that today's session was fruitful for you. If you have any questions or queries, you may please ask, or otherwise today's session is ended from my side, and we can all leave once all of you have left. If you have any questions, you may please ask.